Hi, small business owners, entrepreneurs. I'm here to do a follow up on my Thursday live. Just as I promised you, I'm going to tell you guys about how we're going to work on setting our prices for our company. Okay, it's very, very important that you get a good set of pricing for your company. Why? Because you don't want to undervalue your services so that it's hurting what you're trying to do and you don't get any profit, you don't make any money off of what you're trying to do. So you want to make sure you're able to get a good profit off of what you're trying to do. And you don't want to oversell your services to the point where, no one's going to want to buy from you. So we have to figure out what's a good margin. What's a good margin? What's a good area that we could price our services at so that we make good quality revenue and at the same time we're not hurting ourselves. And the reason why we're trying to do this is so the fact of the matter is that you don't want to go and for your therapy and charge like $50 for 1 hour, okay? And you end up with a cost of $200. That means that for your 1 hour worth of work, you lost $150. And if you keep doing that, you're not gonna have a good functioning business. At the same time, you don't want to charge for your client $3,000 an hour. You know, no one's going to want to buy that. They're not going to want to pay, $3,000 for your services. It's not how it's going to work. Okay. So you have a clinic, you may have a clinic, you have your service that you're doing, an independent service. It's going to work on a simple service that we're going to do and how we're going to help price our businesses, our business and our business structure. So we're going to talk about costs, okay? Cost accounting is I'm going to get more and more into costs as time goes along, but right now we're just going to do your basic general area of cost, okay? So we're going to look at costs. So cost is how much does it make for me to generate revenue for my company? So what do I need to do to generate revenue for my company? I'm doing a video to you right now. There's a cost to this video right now. It's not as much. I try to find a very efficient way of doing it, but still, and obviously you can see the quality of the video ain't got that much, but there's still a cost associated with it, okay? There's also a cost. So in relationship to cost, you have what's called a price markup. Your price markup is your price with relationship to the costs of your company, okay? And that will give you to our profit margin. A lot of you have heard the term profit margin before. But what is profit margin? Profit margin is the percentage amount of what you've retained after costs. So it's going to be like your pricing as it relates to your revenue. All right, how much revenue do I have left over after cost? All right, so that's your profit margin. So your profit margin is going to give you a percentage amount of how much you have left over after your revenue. So let's discuss about cost for example. If you have, let's say you manufacture something or you bought something in order to resell, okay? You produce something in order to resell it. Let's say you purchase something at $20, right? You have something at $20 that you purchase, or a retailer, your retail that they purchase something. Let's say they purchase shoes, right? They purchase your shoes, your Nike shoes, whatever shoes, at $20. And now they're going to try to resell it to you. Now, you're going to sell it at $100 or whatever, $150, whatever. But let's say they decide to do a special sale, so they're going to sell, they sell the shoes. This is the cost. Now they're doing a sale and they're selling it for $50. Okay? This means that now they have a profit of $30. Okay? That's how much they profit. But they already know the cost because that's how much they cost. That's how much they purchased the shoe. They purchased each shoe for that. In your case, since you're doing service, it's different. For service-based companies, we can't really quantify the amount, not tangibly quantify the amount for your service. But we can get a good idea and get a good guesstimate of how much our service is worth, because everything that you do is worth something. You have a license, you did training, you did everything you can to make sure that you're able to become a therapist, or you do everything you could to make sure that you have your company going on. So let's look at this happening right now, all right, with relation to cost. Let's say the market price for your service is $150 per hour, okay, for one client. Okay, now you go to a clinic, I remember last week I said that the base is how much your area is able to pay you per hourly service. So let's say that a partner of the clinic, or is someone who's the lead of the clinic, they get paid a certain amount. They're getting paid at 150. You are the partner, you are the lead of your practice. So you have to get paid around the same amount of 150 an hour. Now, we talk about general expenses. You may have like some general expenses that you do to help provide a service for it. Maybe you would have gotten additional certification. Maybe you have certain speciality that you want to put in. So because of the specialness, you want to add in another 50 according to whatever services or generalization that you have. You may have other expenses to go see your client. May have gas. You may have a service cost, because there's added costs that you may have to your service. And then you purchase your tools, okay? You're purchasing your tools to use for your client. The total of that will give you a total cost of $300, okay? That $300, a total cost now, is going to be factored into how much we price the service to our company, all right? So let's say I have $300 of cost, okay? I'm going to set up my price markup, okay? I have a $300 cost, okay? And I want to know how much would be good for my company. How much percentage wise, or I want to see how much percentage wise is going to be good if I give my client a certain amount of cost. Well, I wanted to give a substantial amount. I don't want to have something very low that it's not going to be worth it. So my cost at $300 per hour for an hour worth of work with my client, I want to have something that I can make a good substantial revenue, healthy revenue. A healthy revenue, let's say I'm going to set my price, let's say price at $500, okay? For the sake of this, we'll say we're going to price us at $500. This will give us a profit, okay? A gross profit of $200. Put gross, GP. Gross. $200 gross profit. I'm going to apply that over here to our profit margin to see the relationship with these with the two. And we're going to apply a formula to it. And the reason why we're going to apply a formula to it is because we want to know how the relationship with these things play a factor in what we're keeping and how we set our cost. Because how you set up your price markup is the price markup you're going to want to do generally throughout your entire company for any services that you do. I want to set up this percentage of markup for everything that I do for my company, because I feel that this is a healthy method of doing my services. So I'm doing my price markup, okay? Now I'm working on a profit margin. So we did say it's $200 of gross profit. And I'm going to put GP for gross profit. Okay? So now we have the formula for finding our price markup percentage. So our PMP, price market percentage, okay, is we take our gross profit, our GP, and we put it over the cost, because it's a relationship to cost, and it's going to times 100, because we're finding out percentage. So every time you try to find out a percentage, you multiply your item by 100. Okay? So in this case, we have our gross profit of $200 all over the cost of our amount. And I want to do it using since this is a relationship to cost, so I'm going to use red. So $300 times 100. And this will give us 66.666 all the way times 100. Or let's keep it simple and let's round it up. It's going to be 66.67%. And this is how much we mark up This is how much we mark up our service. That's our price markup related to the cost of the services that we provide to our client. So this is how much. So now all across the board, anytime you do something else for your company, you're going to be able to mark up your services or what you do at a 66.667%. So it doesn't matter what other items that's going to happen. We're going to be playing a little bit more with that. And if you follow me, you follow this video, you follow what we're doing, we're going to be playing a lot more of it to it. So we also have our gross profit. So now I already found out what my markup is. All right. So let's see how that plays with my gross profit. My gross profit here is now with relationship, GP, with relationship to now our revenue, our price. Now we're able to see we have $200 over our 500, and that times 100, because we're doing percentage again, we see that we have 40.4 times 100. That gives us 40%. That means we've kept 40% of what we've made. That means 60% of everything that we've done, 60% of our cost, or for that one revenue, we only keep 40%. So, this means that your cost of goods or your cost of production, your cost of what you do, 60% of it is gone. Now think about it. If my price was lower, let's say I said I'm going to price my service at $200 per hour, I am losing $100 per hour per client. Okay, that's a loss. Okay, you may not feel it, but eventually it's going to come around to the point where you're saying, man, you're not going to be able to sustain it. So this is why we need to price our services very well. So let's see how all this plays out, okay? Let's see how it plays out, and we're going to do what's called a profit and loss analysis, okay? A profit and loss is going to show us what our cost is related to the services that we have. Now, we said that we made a sales price, all right? Let's do a P&L, okay? Let's do a P&L. We said that we made a sales price of $500 per hour, right? Or per client hour. Let's say that now we had 10 clients in a given week. Okay? We had 10 clients on a given week. That gives us, for that week, we have $5,000 for that week. Okay? At a cost basis now, because we have to factor in the cost for all that we've seen or we've visited clients or everything we've done, we now have $300 for the 10. That's $3,000. Now, let's say that there are expenses that we do have, because it's not only these other types of expenses. Let's say that we have an office expense, right? For advertising. So we have an advertising expense, and our advertising expense is, let's say we had $500 because we had to promote ads, okay? Let's say for our phone and other general and administrative G&A expense, we have another $500 because we have phone, we have internet, we have cable, we have $500, okay? And let's say that now we have taxes, okay? Let's put on taxes. And for our taxes, let's say it's based on this. Let's say it's based on this. Let's say we have $50. Let's say we put a $50 tax on it. For the sake of this, it's a $50. So now our total expense, not total cost, it's expense, okay? Our total cost now would be 1,050. Uh-huh. 1,050. Okay, that's our total cost. Okay, and let's say now that we also have now let's find out our revenue. We find out our GP, gross profit. It's $2,000. Okay, and now our profit and loss. We now have a profit. Give it the scenario. Okay, we have 1,950. 1950. Okay. In doing that, we're able to see this is how much we have left over. This is how much we have left over compared to the $5,000 that we have. Now, let's say you added employees. You have expenses. No, you add in employees. That's an added expense. You add in like a depreciation factor, your supplies expense because your tools are running low. You have to purchase some more office supplies. I didn't factor in that, but that's going to make it run low. I only brought in these three figures right here. But when you continue to add in more expenses, and they will add in as time goes on, or as you're looking at how much you're pricing, you're not maybe going to have 1950. You're probably going to have an even lower amount than that. And if you do not price correctly, you could be hit at a loss. So let's play around. I like to play. Y'all know me, I like to play. So let's play around with a loss. Let's say we did $200 times. Let's say we charge $200. Let's just say we're trying to be nice. We just want to charge $200. We charge 10 people $200. We have 2,000. All right. This here right now, we're already at a loss, 3,000. But let's say we don't have 3,000. Let's say it's something different, okay? Let's say our general cost is 1,000, let's say it's $100 for 10 clients. We have 1,000. Okay, fine. We have a gross profit now. In this case, our gross profit is now $1,000. Okay, GP of $1,000. But still, guess what? We have all these expenses we need to factor in. So we had advertising. Let's say to get advertising out or to do what we had to do, we charge $500. Let's say we have general and administrative. Now, general and administrative, I can say it's your office supplies. It could be all these other things, but we just don't know. But we quantify everything to be $500 too. And then let's not forget good old Uncle Sam. We have to pay his taxes. Okay. Now our taxes, we have $1,050, right? Same amount, $1,050 right here. Okay. But this time we have $1,000. Okay. So $1,050, 1,000 minus $1,050. Now we have a loss of $50. Okay. Now think about this $50 loss. This is for 10 clients. You have a $50 loss. Okay. Now let's say this continues to grow, and it grows. Because the more there's a tying between your costs and expenses. Okay. So as you don't factor in your expenses, your cost of expenses in relation to price and how you price for your services, you're going to incur a loss. So this is why it's very, very important to figure out how do we price our services? How do we price our company? How do we price what we do? Because what you're doing is very valuable. Being therapist is a very valuable profession that you guys have. Okay, and you're providing a very valuable service to our community. So people need to know. People need to you need to be compensated, and people need to be able to pay you for what you're worth. So it's always good to make sure that you're always hitting a good profit. So you want to be able to keep a good, decent profit, you know, keep at least a good percentage of what you have. Keep at least 40% of what you have, you know, as in terms of your gross profit. And then as you can see, your net, this is your net profit. Net, or in other terms in accounting, it's called net income. All right, you want your net to be able to be sustained, so that you're able to have enough to generate for your next cycle or your next round of continuing services. Good profit keeps a good business going, and at the end of the day, there's no better business than you. So in setting up your profit and everything, I hope you guys have a good one. All right, I will see you Thursday at 6:30 Facebook Live, 6:45 on Instagram Live. You guys have a good one.